Asset classes demystified, navigating stocks, mutual funds, real estate, and more. Hello, everyone, and welcome back to X100%. I'm your host, Daniel Brooks, and today we're diving deep into one of the most important topics in the world of finance: understanding asset classes, stocks, mutual funds, real estate, and more. Whether you're just starting your investment journey or looking to refine your strategy, this episode is crafted just for you. So, settle in, grab your favorite beverage, and let's embark on this insightful journey together. I'd like to start by taking you back to a time when I first began exploring the concept of investing. I remember attending a small, intimate seminar in a modest conference room where an experienced investor explained that money isn't meant to sit idly in a bank account, it's meant to work for you. That moment was a turning point for me. It ignited a passion to understand how money grows over time and how different investments play unique roles in building wealth. Today, I'm here to share that passion with you. In the vast landscape of investments, asset classes serve as the building blocks of your portfolio. They are like the different colors on an artist's palette. Each hue brings its own value, risk, and reward. By learning about these asset classes, you'll be better equipped to mix and match them in a way that creates a masterpiece tailored to your financial goals. Before we dig into the specifics of stocks, mutual funds, real estate, and beyond, let's establish a clear understanding of what an asset class is. An asset class is a group of investments that share similar characteristics and behave in similar ways under comparable market conditions. Think of it as organizing your wardrobe: shirts, pants, shoes. Each category has its own function, style, and use. In the world of investing, asset classes help you diversify. Diversification is your shield against volatility. By spreading your investments across different classes, you reduce the overall risk in your portfolio. It's a bit like not putting all your eggs in one basket. When one basket encounters a problem, the others can help balance things out. Imagine building a house. You wouldn't rely on just one material. Wood, bricks, and concrete all contribute to a sturdy structure. Similarly, each asset class has its own strengths and weaknesses, and understanding these can help you build a more resilient, arguably the most talked about asset class. When you buy a stock, you're essentially buying a small piece of a company, a share of its future. I vividly recall my first stock purchase. It was both exhilarating and nerve-wracking. I felt a sense of ownership in a company I had admired from afar, and with that came the hope that, as the company grew, so would my investment. Stocks offer the potential for high returns because they are tied to the performance of businesses that innovate and expand. However, this potential for growth comes hand in hand with volatility. Market conditions, economic trends, and even geopolitical events can cause stock prices to fluctuate wildly. For instance, consider the tech bubble of the late 1990s or the more recent market corrections. Both periods highlight how stocks can swing dramatically. Investing in stocks is like riding a roller coaster. The highs are exhilarating, but the lows can be daunting. The key is not to panic during a downturn. Instead, use these moments as learning opportunities. Conduct thorough research, keep an eye on the fundamentals, and remember that patience and long-term perspective are often your greatest allies in the stock market. A favorite among both novice and seasoned investors. Think of mutual funds as a way to pool resources together with other investors to purchase a diversified portfolio of assets. Instead of trying to pick individual stocks or bonds on your own, you entrust your money to professional fund managers who oversee a variety of investments. I recall a conversation with a close friend who was overwhelmed by the sheer number of choices in the stock market. Mutual funds provided her with a sense of comfort and security. With one investment, she gained access to a broad range of assets, reducing her risk through diversification. It's like ordering a mixed platter at a restaurant. You get a bit of everything without having to commit to just one flavor. One of the key advantages of mutual funds is their ability to manage risk through diversification. They offer a built-in safety net by investing in a variety of sectors, companies, and even geographies. However, it's important to pay attention to the expense ratios and management fees, as these can impact your overall returns over time. For those who prefer a hands-off approach to investing, mutual funds are an excellent choice. They allow you to benefit from professional expertise and maintain a diversified portfolio without the need for constant monitoring. Let's step into the realm of real estate. one of the most tangible and historically significant asset classes. Real estate investments involve buying property, be it residential, commercial, or even raw land. What makes real estate particularly appealing is its tangibility. You can see it, touch it, and even walk through it. I remember visiting a duplex owned by a seasoned investor who shared his journey of transforming rundown properties into thriving rental units. He explained that real estate not only provided him with a steady stream of rental income, but also offered long-term appreciation. Unlike stocks, which can fluctuate based on market sentiment, real estate tends to hold intrinsic value, especially in desirable locations. Investing in real estate is often seen as a hedge against inflation. As prices rise, so too does the value of the property, helping to preserve and even enhance your wealth over time. However, it's not without its challenges. Real estate investments require more hands-on management, from property maintenance to tenant relations, and market conditions can vary significantly by region. For those willing to put in the effort, or for those who can partner with experienced property managers, real estate can be a powerful addition to a diversified portfolio, blending both income generation and capital appreciation. While stocks, mutual funds, and real estate are some of the most popular asset classes, the investment world is vast, offering many more options to diversify your portfolio. Let's briefly explore a few additional classes. Bonds. Bonds are often referred to as the safe haven investments. When you invest in bonds, you're lending money to governments or corporations in exchange for regular interest payments. Bonds tend to be less volatile than stocks and provide a predictable income stream, making them an attractive option for those seeking stability and a cushion during economic downturns. However, they typically offer lower returns compared to stocks. Exchange-traded funds, ETFs. ETFs combine the benefits of mutual funds and stocks. They provide the diversification of a mutual fund while trading like a stock on an exchange. This flexibility means you can buy and sell ETFs throughout the trading day, and often with lower fees than traditional mutual funds. ETFs have grown in popularity due to their ease of use and cost-effectiveness. Commodities and cryptocurrencies. For those with a higher appetite for risk, commodities like gold, silver, and oil, or even the emerging field of cryptocurrencies, offer exciting yet volatile opportunities. Commodities can act as a hedge against inflation, while cryptocurrencies represent a new frontier in digital finance. Both asset classes can be highly volatile, but they also offer the potential for significant returns if managed wisely. It's essential to approach these investments with thorough research, and an understanding of their unique classes is only part of the journey. The next step is to craft a balanced portfolio that aligns with your financial goals and risk tolerance. Diversification is not just about spreading your money across different assets. It's about understanding how these assets interact with each other. For instance, during economic downturns, stocks might falter while bonds hold their ground, or real estate might remain steady. By combining asset classes that perform differently under various market conditions, you can create a buffer against unexpected shocks. One of the best strategies I've learned is regular portfolio rebalancing. Over time, some investments might grow faster than others, skewing your original allocation. Rebalancing ensures that your portfolio remains aligned with your risk profile and financial objectives. It's like tending to a garden. You need to prune, water, and nurture each plant to ensure a harmonious ecosystem. Additionally, consider your investment horizon. Are you planning for short-term gains, or is your goal long-term wealth building? Your time frame will influence which asset classes are more appropriate for your strategy. Younger investors might opt for a higher allocation in stocks for growth potential, while those nearing retirement may favor the stability of bonds and income personal stories that underscore the importance of understanding and balancing asset classes. A few years ago, I encountered a mentor who told me, investing isn't just about making money. It's about managing risk and seizing opportunities at the right time. He recounted a period when the market was particularly turbulent. Many investors were quick to pull out, fearing imminent losses. However, those who stayed the course and maintained a diversified portfolio found themselves reaping the benefits when the market rebounded. Another story comes from a friend who diversified heavily into real estate. While the tangible nature of property gave him confidence, he also learned that every investment comes with its challenges: unexpected repairs, changes in market trends, and even the ebb and flow of tenant demand. These experiences taught him the importance of doing thorough research and always having a contingency plan in place. These anecdotes serve as reminders that investing is as much about learning and adapting as it is about making decisions in the moment. The lessons I've learned and continue to learn are invaluable, and I hope they help guide you. Let's take a moment to review the key insights from today's episode. 1. Asset classes defined. We explored how asset classes are groups of investments that share similar characteristics, helping you diversify and manage risk. 2. Stocks. We discussed how buying stocks means owning a piece of a company. Stocks offer high growth potential, but come with significant volatility. 3. Mutual funds. These funds pool money from many investors to invest in a diversified portfolio, managed by professionals, a great option for those seeking balance and simplicity. 4. Real estate. Investing in real estate gives you a tangible asset that can generate rental income and appreciate over time, though it requires hands-on management. 5. Other asset classes. We touched on bonds, ETFs, commodities, and cryptocurrencies, each with their own risk and reward profiles, emphasizing the importance of understanding how they complement each other. 6. Portfolio balance and rebalancing. Finally, we discussed the strategy behind maintaining a balanced portfolio and the importance of regular rebalancing to stay aligned with this comprehensive exploration of asset classes. I hope this deep dive has demystified the various components of building a diversified portfolio and empowered you to take control of your financial future. Remember, investing is not a one-size-fits-all endeavor. It's a personal journey that evolves with time, experience, and changing market conditions. As you move forward, I encourage you to continue learning, stay curious about the different asset classes and market trends, be patient, understand that markets have cycles, and long-term success often comes from riding out the storms. Diversify wisely. Use your newfound knowledge to balance your portfolio, mitigating risks while seizing opportunities. If today's episode resonated with you, please subscribe to our channel, leave your thoughts and questions in the comments, and share this podcast with anyone who might benefit from these insights. Your financial journey is unique, and every step you take toward understanding and diversifying your investments is a step toward a more secure future. Until next time, this is Daniel Brooks, signing off from X100%. Stay informed, stay inspired, and most importantly, invest in yourself. Happy investing, everyone. Thanks for listening, and I look forward to joining you on our next deep dive into the world of finance. Have a fantastic day.